you've had a great third week of February, got your taxes filed or extensions done if you had to. I have this up, the reader's favorite, because the book just received a glowing review, and it's amazing. It's awesome. So definitely check it out. It's just been getting great feedback, and I'm really excited about it. I wrote it for you guys, you know, so definitely check it out. Take that time. You can buy it on Amazon, also Barnes & Noble. Pretty much anywhere online you'll be able to find it. Just search it. So FMJ, Trust, Transition, and Trade. Of course, don't miss the Modern Traders Summit. We have a really cool little clip that I just put up on the site about all the speakers that are going to be there. So definitely check it out. You know, it's all about learning from others and shortcutting that journey for you just to become a better trader overall and get experience from people that have over 60 years of trading experience all in one room for one day. And you have the chance to speak with them one-on-one as well during breaks and things like that. We are getting into earnings season, so definitely check out the Earnings Whispers. They are also on Twitter as well, so just follow them on Twitter. And you can see they post the different ones. This is based on, you know, who is most talked about for the upcoming day. We do have on Monday, we have, let's see, 62 different companies reporting earnings. Then we have 123 on Tuesday, Wednesday, Thursday, Friday. So definitely check this out because earnings season has happened. You know, if you already are signed up for my watch list, if not, right here, you can do it right at cjandtrade.com or right here. Basically, we had Skechers, we had Philip Morris, we had TransUnion. You know, depending on whether you like to go long or short, I have been knocking them out of the park for the watch list this week. So if you haven't signed up already, you can see it's basically $1 a day. Go ahead and I give you the stocks that I am anticipating to have big movement for that day. You know, if they don't trigger, they don't trigger. So you watch the levels. If they trigger, great, you move forward with them. Just like my watch list for the week, basically, if they don't break one of the levels, then you just watch it, you know, that's the confirmation. Because if it's going to continue, many of them are larger floats, and if they are going to continue, then they're going to continue hard because there's a lot of volume behind it. For the lower floats, like AGMH that ran up on Friday and then it pulled back, lower floats, if you see that happen, like this, I had the level 1252.50 to break. If it pulled back, then and it hit 9, that's a potential entry, but below that, it would be a short. So if you're able to get shares to short, this was a new IPO, so that's why there's only 3 days. So, you know, the levels can be used 2 different ways. If it's on the long list, like I have TransUnion from Friday, if it is on the long list and it does break to the upside, like this one, we've got a new 52-week high, 67.32. I would say the resistance would be 66.93, so 30 cents off of the high, which we can see on the 15-minute chart here. That does look like that's going to be the resistance to be broken. This dashed line right here is the line of where it closed, and this yellow dashed line, or excuse me, orange line, is the VWAP. We also have the 9 EMA and the 20 EMA. I like to watch those to see what's going to happen. And this is the 200-day moving average, or 200-period moving average. On the daily, it would be 200. So you can see that this one pulled up on Friday, and then it pulled back. It looks like a pretty strong support level right there at 66.08, and then it closed up at the high, almost at the high of the day. So this one's probably going to have a nice squeeze to it. It does have 169 million in the float, and it was 41% short float volume on Friday. So I would say people are thinking this is going to go up more before it goes down. Hold on one second. My little one's just waking up. So, hi, my love. I'm just doing the video. Okay, can you be quiet? Shh. So the next one on the long list that we have is eBio. So eBio support, I would say, of 185 and a resistance of 192. Same thing. This is the yellow is the after hours here. So I would look for it to continue strong going into Monday. This does have 9.3 million in the float and 57.6% short float volume on Friday. When we pull it back on the year chart, you can see it is just 10 cents below the year high. So once it breaks that, the potential to go up to potentially 250 and then on up to 3 is there. So definitely keep it on watch. If those levels if it doesn't break those levels, it doesn't break those levels. And we just, abandon it. You know, it's all about creating that plan going forward and trading that plan. We have Ericsson, which does have 2.8 billion in the float, and it was 34.09% short float volume on Friday. If we look at our 15-minute chart, you can see, I would say, a support level, maybe even a little bit higher here of 7, you know, what's the low of this candle? 772. I have 771. It could go, and I would say if it broke 781, then it would continue on up. It does have a larger float, so we're looking for that. Next one on the long list is LNW. This one does have 89 million in the float. It has a short float volume of 32.52% on Friday, and I would say a support of 487, resistance of 520 when we back it out on the year chart. It's not far away from that. We're about 80 cents away from the all-time high. And if it does continue up, it did have earnings as well. It is a lower volume than most of the other ones. So I would look for it to really squeeze if it's going to continue. If it doesn't break those levels and it ends up breaking down through 487, it could be a potential short. Last on the long list is Myomo. So if we look on the 15-minute chart, it did spike way up on Friday and then pulled back and continued to upward trend all day. I would look for support of 397 and a resistance of 413. After that, we'll look at the yearly chart. You can see it does look like it's at a resistance level right here, so keep it on watch. We're due to head out to the park later, so she's very, very excited. Right, next on our short list, we have Pinnacle Foods. Now, Pinnacle Foods did gap up on Friday, and then it pulled back. It couldn't hold that height. So I am looking for this further to gap down going into the week. I would look for a break of 59.48 and then below that 59. If we go to our 15-minute chart, you can see it gapped up right at open and then it failed. It did find a support. You know, it does have this upward trend overall, but it closed in after hours a little bit lower than that. So just keep it on watch. First support to be broken, 59.48, below that 59. It does have 118 million in the float. Next, we have ASB, Associated Bank Corp. Same scenario, gapped up on Friday, and then midday it just tanked, just like the rest of the market did. It pretty much followed the market trend for the day. So I would look for a resistance level of 26.70 to be broken and a support of 26.15. We do have this gap side to the downside. Was $2 gap up. So if we look at it on the year, it did almost test the high and pulled back. So we could have a downward trend potential down to, I'd say 25.15 if it were to continue down off of that, you know, almost a triple top and then fail. Going into the next one, we have Clorox Company. So on our daily chart, oh, sorry guys, it's a little lagging there, not sure why, trading view. So if we look at it here, I would say a support of 114.46, which 114.38 was the overall low of the day and low of the year, and a resistance of 115.43. When we back it out into a 5-year chart, you can see we do have this level here where if it were to break that, I would say it's going to probably go to about 112 and then 111.50. So it could have $3 more to the downside before it could bounce. But we shall see what happens and what the market decides on Monday. Next on our short list, we have Colgate-Palmolive. So Colgate, I would say, this is our 15-minute chart here. Say a nice resistance here of 67.71. After that, it would be 68 roughly, which would be VWAP right here. And also a support level of 67.43. When we back it out on the year, you can see it did join the 52-week low club, and it could continue on down further from there. It does look like it's at a multi-point support and resistance level. If it did break, obviously I think it would go down to 66 and then potentially down to 64.71 if it continues on down. Even if it were to break 63.47, 63.50 area, watch out because I think we could go down further and really break down from here. It did also cross the 200-day moving average on Friday, so that it typically is a big indicator to many people that once that 200-day moving average is broken either to the up or downside, that it's going to continue trending in that way. So definitely put Colgate-Palmolive on watch for short. And Kimberly-Clark, last one on our short list. So we have Kimberly-Clark, which has a support level of 94 point, let's go to our 15-minute chart here. So I have a support level of 99.43 and a resistance level of 100.17. So you can see it tanked basically Thursday, Friday, bounced off of the new 52-week low of 98.92, came up, pulled back, and it's sort of consolidating right here between these two levels. Now we go back over here to the earning whispers. You can see they are reporting on Monday. So much of this is probably anticipated based on what they're due to have happen on Monday. So definitely keep Kimberly-Clark on watch. If it does break to the downside, oops, excuse me, wrong one. If it does break to the downside of 99.43, which could happen in the pre-market, let's see, they are due to report at what time? It doesn't have the time here. I believe it's due to report pre-market for Kimberly-Clark. Oh, 7:36 right there is the time at which they're due to report. So check it. Watch your pre-market activity for Kimberly-Clark at 7:30. See what the market decides, what direction it decides. Do the research as well. Earnings seasons are a great way when there's a larger float stock that is having big movement to go ahead and capitalize on all of that activity. If you do see that it is gapped down pretty much that day, like we had Philip Morris. Philip Morris was setting new lows. Look, it gapped down, it hit a new low pre-market, and then you think about it, many people have stops in place that are going to try to protect themselves. So right at open, boom, it drops down. Same sort of thing happens for shorts to the upside, like TransUnion. When you have that, oh, it gapped up, then you have shorts that also have stops in. Well, guess what? New buyers are coming in, great news, and it continues up. So it will typically tend to upward trend when you have that larger float and larger momentum going on for that week. Now, going into the overall long swing list, we have ALXN. Not sure why TradingView is delayed here, but anyways, so ALXN joined the 52-week low club on Friday. It did have a massive bounce though. It went down to 96 and bounced up $11 from there. So I am looking for this one to be a potential long. I would say go ahead and use 96 as your stop. Next after that, we have X-Ray, which I would say 48 would be the potential stop. They did hit the 52-week low club and bounced. 52-week low actually was back here on April 2nd, right after dividends. So keep that one on watch. Look, you're down here at 58, upside of potentially $20 if it were to go back up. If it were to bounce just to the 200-day moving average, we're looking at roughly $11 out of a $59 or $49 stock. So that's roughly 25% that you could capitalize on. After that, I also have Philip Morris. Philip Morris looks like it actually had a little upward trend here on Friday. It didn't go all the way down. It hit 83.5, which when you back it out to a 5-year chart is a big, strong support level back here. So I would look for this one actually to bounce up to the upside from here. We shall see though. We will see what happens with it and let the market decide. Last one is NXPI. Now NXPI, you can see it's here on a 5-year chart at a support level. It did bounce $2 from the low of the day, and it looks like we do have the earnings coming up on May 5th. So definitely keep it on watch. It could go upward from here. However, it has been downward trending. It could continue in that downward trend. This is a weekly chart, so you can see we have 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of downward movement. So I would keep this one on watch. Definitely do the research, on the longer swing ones. But on the year, it did hit it found a support level and bounced. So that's why I'm looking at it as a potential long. Obviously, my my support or stop area that I would look at would be 103. If it does break that, I would say abandon it on the long side, but it is also on the oversold area. So just keep it on watch. As always, guys, carpe profit, seize those profits one trade at a time. Definitely book your seat for Modern Trader Summit. It's going to be an amazing event. Everybody that is coming is really excited and excited to share their experience to help you profit even more. We have cryptos, we have we have futures, we have options, we have regular trading, we have swing trading, we have talking about tools, talking about trading plan. So everything that can help you be a better trader, that's why it's all here. So definitely come on, check it out, and sign up for your seat today. Have a good one.